Happy Wednesday. We are looking at a little bit of a turn lower in the market, just a smidge. Let's go to the daily time frame. Really curious to see how today's candle closes. If we close red with a bit more of a decisive red, maybe even coming back to try to retest that gap from Monday's open, then that looks like a bit of a textbook evening star where you have the bulls making this run with your Friday to Monday surge. You got indecision. And then if today is a bearish decision day, that doesn't look awesome. The bears could certainly use that as momentum to say, hey, look, we had a little peak. The bulls were able to get back to their little pullback zones. If the market's going to run from there, then we could have a gap fill in play by the end of the week. I'm kind of fingers crossed that the market doesn't do too much damage for the remainder of the quarter, just to see if we have some chop in here, and then in April we decide whether the bulls or the bears continue to take it somewhere else. But for right now, the market seems to be declining a little bit. Taking a look here at my tick and advanced decline line. So we are fading on the advanced decline line. We are going lower in tick, and we have like more of a down volume that's growing versus up volume. So I mean, SPX is down about 35 points right now, and that gap fill, if it gets a little bit larger, that gap fill is in play. This all changed in real time. So I mean, I was noticing there wasn't really much to the downside outside of the 57 or the 56.75 zone, and now this has increased where the bears might be willing to claw back a little bit more. I kind of want to sell a bear call spread, but it just seems like 5,800 is just not that far away if we had like a 50-point move. But let me see what the day looks like. So if I did let me look at I looked at this earlier. I didn't really get the fill that I wanted. So I passed on the trade, but I'm thinking if I were to pin this thing at like 5,800, yeah, I'm just better off doing a bear call spread. 59. If I stagger these, I can get a buck on that trade. If price goes lower, that's going to be a pretty quick dollar to win. If price comes back up at all, I mean, this is starting to light up a little bit more. But yeah, I'm curious where the bears are. This put option volume has increased from it was pretty much dead equal at like 30. It was 30% call side, 30% put side. Now it's 60 to 8. So if we do have continuations lower, this market may be coming after that gap from Friday to Monday. So I'm going to give it a little bit more time, just because I took a quick win in SPX this morning. We haven't really had anything bad happen, but I can see like those bears didn't go away. I think you're silly to think that the bears all of a sudden are just completely absent. I even pulled this headline this morning. I think Trump is now in the bandwagon of jawboning the markets. This is certainly a headline that's going to support it. Probably more lenient than reciprocal. So April 2nd, taking away some of that potential uncertainty by like, look, we're willing to negotiate. We're willing to go to the table and figure out what's going to be hopefully mutually beneficial. But this is one headline, and who knows what it looks like later today or tomorrow or maybe on April 2nd. So I'm still just cautious, right? A lot of defense, a lot of closed out trades for winners, watching levels closely. Time is going to help. I'd like to see a Thursday, Friday for this week still hold in there. If Thursday, Friday can hold out with trying to make a high for the week, that would be helpful. So let's do some top down. Let's look at currency strength. Currency strength for today, we have New Zealand and Aussie on top. We got the CAD making a bit of a run. Euros in the middle with the dollar and the Swiss, JPY and pound on the weaker side. Not a ton of volatility on currencies. A little bit, but not a ton, 50 and 50. So you're getting maybe about a 100-point move somewhere out there between the pound New Zealand. That's about it. Other than that, pretty contained. We have the markets down slightly. S&P is down about 0.43%. SPY down 0.44. Equal weight, interesting. Equal weight is up. That's a pretty big divergence between S&P. So this has to be a little way on Mag 7 again. Yep. So Mags is down. Let's take a look at those, by the way. So Apple's actually flat on the day. Amazon is down on the day. Broadcom is that's a big one there. So Broadcom is, they crossed $1 trillion. Now they're 861 billion. So Broadcom is down $13 for the last 3 days. That's not a good look. So that's dragging down from it's not technically Mag 7, but they were throwing them in like the Fantastic 8 or whatever the heck they're being called now. Google slightly down in the day. Meta also slightly down in the day. Microsoft slightly down in the day. That one, I don't think I have any trades on Microsoft outside of April. I'm going to hang on to those. Netflix down as well. Yeah, I like Netflix going a little bit lower. I think Netflix, if it heads down, that's good. It's not a Mag 7. It's like one of the old Fangman stocks. But I have a butterfly up here, and this one was closed out for full profit last week. NVIDIA, pretty big drop in NVIDIA. That gap lower from 120 and change all the way down to an open today at 118 and a sell off towards 115. So NVIDIA not looking awesome. Tesla up to 289, almost 290, and back down to 275. I did a video yesterday on my YouTube channel in the afternoon. I just shared a trade. This is a trade that I took. This is a trade that I kept these shares in assignment from because it was below 255. So I took the shares. I put in a cover call this week at 247.50. I pulled in about $18 of credit. I rolled it yesterday in session for about $2.60. So if by next Friday I could have just kept it and taken the income. But I thought, well, if we stay above like the 247.50 level was still mechanically in a good spot for the option chain for next Friday. So if we stay above 247.50 by next week, I make about $6,000 on Tesla in a 2-week period. It's not bad for a little income flip. And price, I'm curious if we, can kind of spy on Tesla and keep an eye on maybe a bullish pattern. The downside right now is that Tesla is still underneath the 200 moving average. Right? Like that's a tricky spot. So we could be kind of, carving out a low. Maybe there's some type of falling wedge. Maybe it gets worse, right? Maybe this isn't done yet. But there is some pretty interesting news coming out for Tesla. I think there was something with Saudi Arabia. Is that what I read? Market reacted positively to President Trump's hints at delaying auto tariffs, reducing trade concerns. Okay. And then I thought there was something on Saudi Arabia for Tesla that came out this week as well. But anyway, as long as we stay above 247.50, I could care less. It's just an income trade plus this, plus own shares. Berkshire Hathaway still making all-time highs. How is this stock going to find the 200 moving average? I don't know. Warren Buffett probably has to pass away. That's awful to say, but this is a company that's sitting on about 20% of their assets in cash, waiting for a bigger opportunity. What was value plays and they've held on to for a decade is no longer value plays. That's why they were net sellers of Apple. They sold Bank of America. They've obviously rotated around quite a bit. All right. Bonds, TLT is down. Let's see what yields are doing. Are yields back up? Probably. Hey, you know it. 10-year just still sticking around that 4.35. This is why Trump is urging the Fed to cut rates. That's a terrible decision, right? If the Fed is forced to cut rates, the market reacted that way to cutting rates. If we cut rates again and the market sniffs it out thinking it's too soon and there's recession risks, then yields are going to go higher. I think the Fed should do nothing. I really do. I think the Fed would be silly to do to feel pressured to cut early. I mean, right now there's only the next Fed meeting is May. There's not a Fed meeting in April. So if we take a look at the probabilities here, it's still a June. So I mean, we're still looking at a pause in May. I haven't seen the shift at all, but there's nothing in April. So does it give the market a chance to do something seasonally? Seasonally, the market should be going higher. We typically get through like a little March pullback or February, March pullback, and then middle of March, late March, it picks itself back up, dusts itself off, and then March, April, May, we got a pre-summer push. If it's strong enough, it lasts into the summer, typically going into like July and August. So that's kind of the big question mark we're at. Are we going to stay above this 200 moving average? And this was probably a big sign of relief for a lot of investors to see that price was able to get back above it. My concern was that we had this pullback right to it, rejection, 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 and then it fades back down. So the fact that we did close above that, that's a good sign. Now we need to see if it will stay there. If it will stay there, stay there, stay there, that's good. Let the bulls and bears duke it out. There's still room to get back to bigger pullback zones, right? We're going to see if those bears want to claw back. So I think this is a spot where be very careful. I don't want to get heavily positioned for one way or the other. My hedges that are in are out to, August and September and out to December for right now. And I don't really feel like I need to have fresh hedges on, not yet. But it's probably going to be somewhat wise to have something maybe for like a 30 to 60 day window just in case we have another dump. I still think that this is a bear trap area. If this market's going to be resilient this year, and I know I've talked about this, but I really realistically think that if the market does too much damage below this level and we start to get into free fall mode, US goes into recession, drags the global economy down, everything's bad. That's how quickly this whole thing could be like Europe is up and China's up and the US it's going to fight back. Maybe. But if the US drags the global economy down, nothing's going to look good. So I get it. Like the Trump put and the Fed put may be dramatically lower as far as like stepping in and reacting to something. But this is going to do a lot of psychological damage and sentiment damage and real investment damage. If you take a 10% haircut in your 401k or 10% haircut in your portfolio by passive investing or financial planners are getting their asses kicked in the markets, taking another 5 or 10% hit to the downside to have a 20% correction, nobody's going to be happy, right? And yes, I understand that a 20% correction could ultimately lead to multiple years of getting back to these highs. But if a buy and hold investor is just getting back to all-time highs 2 or 3 years later, that's opportunity cost, right? That's why it's important that you're still investing as this market may be dropping. But I think if we want to have a global economy that is resilient and still growing and everyone is catching up to the US, I think the US needs to do its part and stay resilient as the global economy can still have that rotation into, Europe is going to be on a major spending spree this year. China still continuing what they started last fall in September, major spending spree to kind of put a backstop to the failing markets. So it's a tricky dance, but we'll watch it all unfold. So let's see what happens. All right, what else? Dow is actually up on the day. Good. I bought some shares of the DIA back on this little dip. I've got some 1-on-1 trades that I closed out as well. Let me see if I have any of those left. Let me check on my DIA. I might not have any trades left. Nope, I just have shares. So I closed out. I had a one this trade here. I did a 1-1-1 trade on the DIA. Let me go back to my tracker. Where the heck did my tracker go? There we go. SPY, DIA allocation. There it is. It was a 400 by 395 by 390. It was a 425 expiration. I pulled in $2. It was already trading for like $1.60 or $1.70 net profit. So I'm keeping the profit that was closed out. Do I have another one? April 17th. Yep, keeping profit there. Yeah, those were good. Very good. Plus a profit trap on that one actually. So my $1.37, I closed that one out for a small like profit trap. I think I closed out for $1.50 or $1.60 per contract. All right, so DIA is up. Russell is down slightly. These trades I also closed out this week. I don't even know the number this week. I've closed out probably close to 120 trades for profit this week. I said that de-risking area, that chance to look your portfolio, if the market is allowing you to come back and stay, get out of trouble. And all I was doing is lightening up my risk. It's like I was willing to take on and nibble at some of these downturns, but what I'm trying to avoid is if we're going to go lower, I don't want to be taking on assignments with, kind of some of my lows picked out from these recent levels. So as this market went up, I had a lot of my cycle trades that were in red that now turned green, and I'm taking some of those profits. A lot of them were just talking selling premium or taking in credit. If I have, let's say I pull in $1 credit on a trade. Okay, so if I have $1 credit on the trade, a lot of my trades I was seeing for I could keep about 70% of that trade, or somewhere even higher, like the 120%, because I have some profit traps built into it. So for most of the trades that I closed out, like well over 100 this last week, anywhere between 70% of what I plan on keeping or even a bonus profit, I did a lot of that trading this week. So a lot of these pushes have allowed me to do that, and that helped me clear up and go from this was cash wise, this option buying power and stock buying power, option buying power was down to about 900K. Now it's up to 1.5 million. So I have freed up a lot of trading power, a lot of option buying power, a lot of stock buying power. I have plenty of cash at the ready. I am just under 50%. So I feel like pretty prepared for if we have another downturn. I have plenty of capital to be deploying. And if we get another jump in the VIX, I have plenty of capital to take advantage of a potential another surge higher in the VIX. I will say this next go around, I will probably take advantage of the SVXY. I didn't do it this time, but I kind of wish I would have. This would have been a nice little purchase right around 44 bucks. Grab a quick like $4 or $5 out of it. That would have been a nice trade. I was looking at just selling puts, which is fine, but I was looking at selling like 400 shares of this, and it was tying up like it doesn't trade like a margin account. So I didn't really feel like I was gonna safely throw $20,000 at it and say, well, that's the bottom, but it was. But I think I'd be better off just buying shares. So I'll look at that if we have another spike up in the VIX. Dollar index is still not making a ton of traction either direction. Still pretty quiet on the volatility side of currencies right now, but I still think the dollar index has a short-term recovery ahead. I look, you can look at this on the 4-hour chart. Okay, I think the 4-hour chart's pretty clean. Couple of levels to watch. If we have a slow pullback into this 200 moving average and then it turns back red, that's a good looking trade with a stop loss above this high or above this trend line, and look and see if you can recapture these lows. So if we can recapture those lows for another trend to the downside, then that should be pretty good. I'm very curious though. The dollar was dropping as the stock market was dropping. So usually they're not correlated like that. Usually if the dollar's weaker, the stock market is stronger. But in this case, the dollar was taking a big beat to the downside as the market was falling. The market bottomed and has rallied a little bit, and the dollar has like softly turned up. So I don't know. I don't know if this is going to be, dollar that plays into the hands of the bears to come back in. Does that next leg lower also yield a lower stock market? It shouldn't, but it might. I don't know. You know. So anyway, this 200 moving average looks pretty good. This whole area is a big inefficiency on the daily time frame. So I'm not going to force a sell trade, but looking for a simple, trend line break. I'd like to see price just pull back a little bit more, try to find some of these inefficiencies and kind of check some of the boxes there, and then look for a turn. Confirm it there, stop loss above, or what I kind of like to do is I nibble at some of these trades. I would take one stab in the trend line break and then see if it pulls back to test the highs, take another stab there, then look for another sell-off, and then put your stop loss above and see if you can take that trade. That way you can kind of average in for like 2 or 3 entries, trade small to do that, but still have a stop loss just above kind of this 106 to 106.50 area. Am I trading Pfizer? Yeah, I've got some trades on Pfizer. Pfizer, I mean, I like it. I don't know why this company will stop making COVID vaccines and start making cancer vaccines. Start making Ozempic. Start making something that people want. I mean, honestly, I hang on to the shares. I've got a diagonal spread out to 2027. Pfizer from the fundamental side is pretty darn good if you ask me. I mean, this is fair market at like a $35 or $40 stock. Checks a lot of boxes. Dividends is not well covered, but still, it's maintained. We've got earnings forecast to grow. We've got trading way below estimated values. On paper, fundamentally, it's still very low price to earnings. And I mean, when fair value is at $70, it's like, okay, well, freaking do something then. Like, I don't know what they have to do, but do something. But compared to its peers, I mean, Johnson & Johnson's at a 27.6 price to earnings multiple. Pfizer's 18 times the earnings. I mean, I look at it as like it's a value play. It's got a solid dividend. It's very low beta, so that's part of the reason I'm in it. I am in it with shares. I'm in it with a diagonal spread. I bought a deep in the money diagonal spread, which looks something like this. I bought a $20 call, and I'm selling at 29. So my 29 is out to May. It's still another 51 days out, but unlikely we're going to get above $29. But if we do, that is about $2,000 in profit, and I've got this on every account. So Pfizer, like last year, I made, I don't know, I think I made like $15,000 on Pfizer last year for the portfolio. I've got it set up to make about $20,000 this year if I get these trades called away, but I'm out far enough. I'm out to summer of 2026. So this is June of 2026. So I'm like, let's go out this year. Let's get through to 2026. Come on, Pfizer, you know? So, and plus, I mean, every time it doesn't get called away on the sell side, I'll just sell another like 30 to 60 day call option and just try to like whittle down the debit. But I do like the trades. I own shares of Pfizer and the dividend's fine, but I would like to see, I mean, this is what I did on the high. Here is a daily time frame. I mean, I just took this recent high to low and it's like, okay, well, give me a shallow pullback. I could even say there's a bigger target if I go from that all-time high. But recently, like if this is a high, low, lower, high, lower, low, well, okay. Then even if we pull back to $32, $34, great. Make a move, man. So I don't know. Maybe the next earnings catalyst has to be the reason it goes up. Does it get worse? Maybe, but I mean we're back down to freaking COVID levels. Like, what's up with this? Right? So all right. Anyway, oil. Oil is off the lows just a little bit. I still think oil is going to make lower highs, lower lows. I still think this floor is in jeopardy. Honestly, the next trade in oil for me would be something like this. If oil comes back to the 200 moving average and starts to turn south, I may look at a either a bear call spread, or I might look at an out of the money bear call a bear put. I bet bear put spread here, or a bear call spread out of the money. That makes sense. So if we come back to this resistance zone and we start to sell off, I might look at a slightly out of the money bear call spread and just see if it continues to make lower highs. This floor continues to be tested. If the U.S. wants lower inflation, I think energy is a big part of that, and that would have to be the play. Oil going lower makes energy a lot less sticky in inflation. So your headline inflation, not core inflation, but your headline inflation could read a little bit lower if we have lower energy prices. So I don't have any trades running on oil. I'm still long natural gas. This is also pulling back, but we're still in a buy zone. I mean, natural gas has been up quite a bit above the 200 moving average. I look at this as a potential uh, bullish pattern. If this is a left tip, center tip, and we're coming back in to settle in around this 200 moving average, that'd be another good spot to look at long UNG and see if that heads back up into this structure or some inefficiencies above the 30s. So it looks like my $23 call for April is likely not going to get called away, which would be for around $18. And I'm just going to continue to sell it. And so I'll lower the debit. I'll lower the debit. I'll lower the debit as many times as I can. And hopefully I'm doing that with the price still appreciating, and I can shift this around where I'd like to make, I don't know, a couple $1,000 per account on this if I can. But longer term, I still think natural gas looks pretty good. Gold 30.19. Gold, we have overbought conditions with divergence, and that's pretty obvious. I've been saying this for weeks. Like, I'm not buying gold. I bought gold in this wedge. I bought gold on this pullback. I bought gold in this breakout. I still have long shares of GLD. That's my favorite way to trade gold if you want the spot price. And then when I find option opportunities, I trade gold futures. So what I'm going to look for is, do we have a pullback into some moving averages and then a turn up? Okay, maybe it's a shallow dip. If we pull back to this level of resistance, okay, fine. We pull back to this 200 moving average, which is really what I'm watching. Okay, the SPY hit the 200 moving average. Costco hit the 200 moving average. Walmart hit the 200 moving average. Palantir hit the 200 moving average. Meta hit the 200 moving average. Netflix hit the 200 moving average. Like, all those stocks turned. This is a very high bar count as well as a stretch away move. I think gold is going to, and look, it may not make a bearish move to hit the 200 moving average, but we also may go next to nowhere until there's just this monster accumulation zone happening. So I would say patience would be hopefully the best action on gold would be don't force any trades. If the market just consolidates, then another breakout coming could mean more really nice upside. But if we have a correction coming, well, cool. Let's freaking get it. A slide down to this level here that puts in a little topping pattern. Well, I would be eager to buy up some more gold on a corrective measure. So if we go high, low, lower, high, lower, low, sure. Look at that symmetry. plot some more levels, and then it would be options for days. I'd trade GLD options, I'd trade GC options, and I'll add some more shares to my GLD holdings as well. Okay, silver. Silver's hanging in there. So if we compare silver and gold, we're still clinging to this multi-year range. I'm curious if silver actually gets the upper hand. If we break this structure lower, that means that silver would be outperforming. So maybe that happens. Bitcoin, nothing too exciting here. We came up towards around 88,000, pulling back a little bit, but not bad. As long as we stay above 75K. I mean, MicroStrategy's hanging in there at $330, down a decent amount. I mean, from 340 down to 330. But again, do we stay above 310? Do we stay above 300? Do we have just a chop fest in here? Is MicroStrategy going to be doing this? Maybe. Bitcoin is not breaking trend lines. There's no major momentum here. So it looks like Bitcoin is still in a bit of an accumulation phase. Major resistance to hopefully hold as major support. There's also support with this outer trend line. So this is a key level on Bitcoin to hold. If the bulls can hold this area up, then a break of this trend line looks a lot better. But my concern is that if we end up falling through this level, and it's not a bear trap, so if the bulls don't immediately respond with that, if this ends up falling through this level and then falling through this level, and we come down and take out this low, then I think we put in a major top, and we're looking at like a 70+% pullback on Bitcoin. That would be unpleasant for most of the ETF buyers out there that have enjoyed, hey, this thing finally went live. I can trade it my typical stock account. My financial advisor saying I should have 1% exposure in Bitcoin, whatever. But they've been rewarded very well for that. Having that little exposure in Bitcoin, they get a run right there and a run right there. So if all of a sudden that is going down by 70%, that's going to feel like crap to watch all these profits fade aggressively. Not that people are going to dump the position, but I think Bitcoin is still a very good barometer for risk appetite. So if we can hold this area, and we can make a run, that's encouraging sign to maybe get back to the all-time highs or possibly have another swing higher. We will find out. Coinbase. Well, I do want to watch this one closely. So I do have some positions. Let me check on this one right now. So this is by Friday. Looks like I have Coinbase. Okay, so I closed out, this one closed out for profit. $1.07, I closed it out for, I think I was up like $110, $120. So I got a little bonus trap on that one. Let me check my positions. So Coinbase, this one's out to April. Max profit's 225. I'm already up 66% of that trade. This one's April, same thing. This one is April, same thing. This one is an IRA account, no exposure there. This one, IRA account, no exposure there. This one, nope. This one, corporate account, no. This one does. This is April, up about $155. This one is, I closed out for profit. Let me check on this one really quickly. So this history for coin. We go year to date. What? No trade on coin? Okay, let's go this account. Okay, so for some of those ratio spreads and income, there's $515 over 2 trades. So it was this trade for profit. This trade is still running for profit. Overall, closed out for about $500. That's fine. The nice thing is this was the trade where by Friday, if we were, well, it would have been nice to have a little bit more profit trap because it's possible that if we're right at 195, I don't have assignment, but I still have a $5 profit trap. This could have been maxed out about a $600 trade. I still took profit on it. It's still fine. I made $500. It's fine. But this trade is still looking good because the strikes are lower. So now the only trades I have running for Coinbase, for all coin, it's April, 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 April. They're all 111s for April. It's currently up around $619. The strike that I'd be worried about would be the 155, which means that Coinbase would have to drop we'd have to drop another 21% on Coinbase for that trade to be threatened. So over the next, 20 days or so, that's probably not likely, but let me check for 22 days out. That's pre-earnings, by the way. So this is trading at like, an 8 delta. I mean, the probability of that getting a sign is very slim. So I still like the trade to pull in full profit. That should be worth hopefully about $1,000 on that trade. Okay, that's Coinbase. Ethereum, if it doesn't break the trend line, stay out of it. Copper just surged to all-time highs. Do watch copper. This is not the spot that I want to say, hey, let's buy copper at all-time highs. No, thank you. But I will say we need to have a pullback. I mean, that's an interesting rejection candle. So copper maybe have made a nice little surge. Look at this kind of 1, 2, 3, 4, 5. Don't be surprised if copper puts in a bit of a top. 1, 2, 3, 4, 5. We're probably going to have an ABC correction. So if that correction plays out, let's say high to low, lower high to lower low, usually it's coming back to this area or this area, which means if we have copper entering into this zone again, I wouldn't mind looking long. If you want to take a gutsy play, that would be looking to get bearish on copper to essentially call the top. Probably not what I want to do right now because we're at all-time highs. That momentum could still be surging higher. I'm not calling the top here. But if we have a correction, that's cool. Play out correction and then look for higher lows. Okay, Japanese yen, nothing there. I'm out of this trade for profit. Nikkei, EWJ, still hanging into some profits. DXJ, German DAX, sideways. Fez just sold some premium on this one. FTSE, just good dynamic support on the 200 moving average and dynamic EMAs. Nothing crazy. I'm not buying FTSE or anything, but it still looks postured pretty well. I like Europe better. Actually, I like the Euro stocks better. I like this is FEZ for Euro stocks. This is the DAX. Argentina didn't quite pull back to the 200. I'm waiting for an opportunity to buy it. I may not get it. China slightly down, but China is kind of a volatile, but still making higher highs and higher lows. So, I mean, does it give us something like this where it's going higher, pulling back, higher, pulling back, higher, pulling back again? I mean, China might also offer the markets another opportunity to get long. So I'd say just be patient. Brazil, I'd love to see Brazil. This is EWZ above the 200 moving average. See if we can break this trend line and get into a buy zone for the first time since January 2024. This has not been in a buy zone. This is also a large range. I mean, I would be really happy to see the shares that I own of EWZ getting back to 35 or potentially, $40 to $45. That's going to have to be a big emerging market push. That's going to be a big commodity push. That could be something that's non-US based as well. I mean, it's a value play. It's nobody likes Brazil. So it's cheap enough. It's at 2015, 2016 lows. It's at COVID lows. I'm taking a stab. Okay, we did Bitcoin, Alexander. As long as it stays above 75, it's accumulation. ILF, this is LATAM. This is Latin America. I took another stab at this one. I added some shares. MAGS, like I talked about earlier, MAGS is down. We'll see. We're sitting right at the 200 moving average, coming into the quarter. I mean, from just a simple fibs from high to low, the 30%, 38%, 50%, I mean, there's still some pullback zones if MAGs get a lift. If anybody is cheering on the markets in general, if you think, man, I want the S&P to go higher, I want the Nasdaq to go higher, you better hope that MAGs goes higher too. I don't think that 493 stocks are enough to go up and have the MAG 7 go down and see this market go higher. There's still way too much market cap. They're still way too big. And granted, investors are trimming MAG 7 positions and they're trying to get the allocation, back down to more reasonable levels. But 493 stocks, you'd think could help the market. It can build some resiliency into the market. But if MAG 7 is going down, it's going to drag the market lower. So maybe the best case scenario is MAG 7 just remains resilient, okay, and 493 stocks can show some signs of growth. But if MAG 7 goes back up, the market's going to respond probably favorably. So if you want higher prices in Nasdaq, you want higher prices in the S&P, you probably want to see mags go up too. Okay, so Peter's asking about the Nas. I mean, watch Mag 7. I mean, right now, I mean, if I'm looking at my stocks above the 200-day or the 50-day moving average here for the Nasdaq, we're only sitting about 33% of stocks above the 50-day moving average. I mean, I think there's a great timing indicator if we have another opportunity to buy the Nasdaq cheaper or at lows where it's like everything in the Nasdaq is down, where it just looks like a bargain. That's where I would want to get long the Nasdaq is if we came down to these like really like bottom of the barrel levels, and I'd say, okay, I'm going to take a stab at the Qs. So I don't think that the low is necessarily in, or that maybe the broader move is like, okay, Mag 7 is resilient, it keeps the Qs elevated, but the whatever 90 stocks, 93 stocks in the Qs are going to continue to tread water because remember the market moved aggressively away from growth and momentum early this year. Did it not? Like that was a heavy dump of momentum, heavy dump of growth, heavy dump of deleveraging. And that's what this big decline was. I mean, you can throw tariffs on top of that and say that's what ruined the sentiment, that's what soured the mood, but the rotation was already underway. It was needed to happen. The corrections needed to happen. So a lot of it was the forced rotation into rebalancing portfolios, taking profits. And once we saw the scare of, you know, tariffs potentially increasing inflation, slowing growth. All of a sudden, people are throwing the word out stagflation. Well, then growth is done, momentum is done, and it got beat up so badly that, I mean, I think there's a good buying opportunity if it comes back to these like really good bargain levels. So anytime I see this, this is NDFI for the Nasdaq 100 above the 50-day. Anytime I see this thing in the low, like double digits, like 12, 11, 10, it's been a beautiful timing indicator to get long. Now in the context of where we might be, I mean, just be careful on this. If we go back to 2022, okay, this 2022 was a slide, 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 slide. So getting long here just gave you that. Getting long here just gave you that. Getting long here just gave you that. So tactically speaking, if it's a timing indicator, remember, if we're making lower highs and lower lows, this timing might be time to buy. So I wouldn't say this is going to like all-time highs. I'm just saying be tactical, like be kind of quick to some of these trades if it gives you a timing indicator, because all these that we had back in 2022 were, 8 to 10% rallies. This was a 15 to 17% slide and then an 8 to 10% rally, another cut to the downside, another 8 to 10% rally, and it did that multiple times. So there is good timing, but in the context of the market, just remember, maybe good to take some profit along the way. Okay. All right. Other stocks, Costco, tap the 200 moving average. I'd love to see if Costco, two things, either Costco splits. I'm just not interested in the stock at $930. I did a bear call spread. I did a bear put spread. I did broke wing butterflies. All those paid out really nicely. I do want to consider a 111, but I don't really want to own the shares at freaking $700. I love Costco, but not enough to say that I want to own it with 100 shares in my portfolio, tying up a ton of money. So I would say this: I'd love to see Costco split. If they want more buy-in, it's like I know it sucks, like you water down the stock price, but it just gives holders more stock, which is fine. Which I have some fractional shares of Costco. Um, Not enough to control the options that I want, but it's a decent chunk position. It's a whatever 5 or 10 grand. Um, but if they split like a 5 for 1 or 10 for 1, I mean, then you set it, forget it. Like I would buy Costco at $90. If it splits 10 to 1, I would buy it $90 and I would never worry about it. And I think this stock is going to continue to be one of the biggest retailers in the world with some of the most loyal members. And it's a good stock. It's still trading at a high multiple, really high multiple. So, I mean, fair value on Costco. It's pretty much fair value right now with the decline. So we're trading at 54 times earnings for a grocery store. I know it's more than a grocery store. I get it. But that is ridiculous. That's the same reason Walmart dumped. It's like these are high multiples for, you know, essentials. And I get it. If anyone is a member of Costco, you know what I'm talking about. You go in, I've not gone to a Costco in probably 2 years. I hate going to the store because I never just buy what I need. I always get like, oh, that's cool. That's how blah, blah, blah. Waste money. Anyway, we're at fair market value. So cool. But does that mean I want to buy it now? No. I want to split so I can trade some options at a much cheaper price and I can own it where I want to. Similar to what it did on Chipotle. Chipotle was a $1,000 stock and it split. And so I started doing ratio spreads and other things at $35, $40, $45. Gladly would take on shares. I never got assigned a single stock. I just took a bunch of income trades on CMG. So I mean, I don't know. I don't know if they're going to split. Maybe they do, maybe they don't. But still, it's very high price to earnings. And I would like to see maybe this. If it's a high, low, lower, high, lower, low, maybe I'll take a nibble there. What I did do was, as far as retailers go, I did take this trade on Target. I did a ratio spread, and I put this all the way down into the 80s, I believe. So I did a ratio spread on Target right here. I did a ratio spread, pulled in $1.74 credit. Let me put this one here. So group ratio spread. So I pulled in $1.74 for income. I would be willing to own the retailer at a monster discount. I'd own it at like $69 or $68 if I did take any ownership. But I mean, that's one like very beat up retailer. I also threw in more puts on Nike. It's just a brand, but their earnings were okay, but they still went lower in price. So I ended up doing a 55.50 and 47.50 put combo out to the rest of this year. Oops. And if it stays above, I mean, I'll take shares of Nike. I don't really want to because I collected $5 of credit. Like, yeah, give me $500 on Nike without owning a single share. Okay, Home Depot. Home Depot and Lowe's, I think there's good buying opportunities if they are coming back down to these major support levels from 2022. Same thing here on Lowe's. Come back to some major support. MasterCard, Amex. Ooh, I'm going to check in this one real quick. Amex might be looking good for some profit. Amex is ratio spread for April is up 91 cents. It's up 81. I'm up 90% of that profit. I'm just going to go ahead and take it as long as I can get out of here for like a 10-cent debit. I don't want to pay more than that. So let me see if I can get out of here for like 10 cents. 15 cents. You freaking turds. I guess I'll wait. I'm $20 safe. Let me see what the April 17th 260 looks like. April 17th 260 is now trading at a 17 delta. So I have about an 80%, 83% chance it stays out of the money, which is good. Honestly, I should probably just take. I don't want to take the profit. Possibly better. Let me see. Amex. I mean, it's not a bad spot to take the profit. Lows around 255. My ratio spread was a 270 by 260. The nice thing is I would actually own the shares around $250 or less because I have the 270 by 260. That's a 10 wide. So I would have a 260 assignment minus $10 minus the 280 credit to own this at like 247, which is quite a bit lower. So anyway, I just think that if I want to take the profit on this one, I could. If I want to go to May, it's probably fine. I just need more time in this one. But I'm up about 90% of my credit right now for this ratio spread, and that's okay, right? Like I'm up. Let me see if I can close this one down. There we go. Let me put in a 5-cent debit. As long as if it's like 10 cents or less, what I pull in, 91. So as long as it's less than 10 cents debit, I'll take the trade. 5 cents, 6 cents, 7 cents, 7 cents. All right, so I'm getting out of that trade. That's a winner on Amex, AXP. It's a ratio spread. Let me see if these other positions have it, and then I will take a few more last requests and then let you go. This account, AXP, ratio spread, close this one out for a. This shows a credit. I'll go 6 cents debit, 7 cents debit. $0.07. Amex here, no. This one will have it. Let me label this ratio real quick. Okay, so this trade closing for a 7 cents debit. Come on. 6 cents debit, even better. Next, no, 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 no. All right, Amex closed out. Very good. So Amex closes out, and then I still have a May expiration that if we get seasonality, probably won't have assignment on that one either. But if I take the assignment, I'm willing to own the shares and see if there's some resiliency built into this. I will just work the cost basis lower. So not a bad play. Johnson Johnson still had puts on this one. Progressive off the highs, took a ratio spread for profit. CB, this one's good out to May. Palantir, so ratio spreads for April. Carvana, no trade. Salesforce, no trade. O'Reilly, the little creepy fucking brick and mortar retailer that you want to buy windshield wipers and brake pads, and this thing's at $1,379. I don't understand how this thing is so amazing, but ORLY. I mean, I've seen better snowflake analysis. I don't know, man. This is a wild stock. 33 times earnings, current price fair value. It's like, man, if the premiums were good, I'd love to sell the crap out of this thing. Let's look. ORLY. IV's going to be low. I don't know, maybe. I could be barking up the wrong tree here, though, if I'm trying to sell this thing. But we have earnings on the 23rd. So I can do a pre-earnings play out 22 days. That's not a lot. Let me see what I don't know. This is going to be interesting. If I do a bull call spread, and then that's not a bad trade to me. So I have a bull call spread and a 22 delta sell. 1460 is 20 out there. That's a 15 delta now. Like that trade might be okay pre-earnings. So what's my 1460? 1460. Can we go another 5.9% higher over I mean, the daily chart shows overbought with some divergence. We don't have like a crazy high bar count. Man, it's been a long time since I hit that yearly moving average, though. Since 20, wow, this has been that's impressive. It has not hit this 5-period yearly moving average for since COVID. It's crazy. Anyway, I don't know if that's the smartest trade, but I think it'd be pretty easy to make. I mean, that's pretty compelling to make like $500. That's a 20 delta, though. Maybe I can shift this once. It's not really any better. That one's okay. A little bit better. Okay. This might not be a bad play. Let me see what this looks like on a portfolio margin account. Fudge, man. Really? This is a portfolio margin account, which should be about a third of the buying power, and this is reducing by 12 grand. I'm not going to take that trade. I can put a spread on. That's a little bit better. But now, I mean, I don't know. Again, like you play with the options, it just doesn't quite set up the structure that I want. Now there's risk on the trade. I can't really roll it like I could if I wanted to. Plus, if I rolled it, I'm running into earnings on the 23rd for the April 17th expiration. Just for fun, I'm going to just look at this trade hypothetically. So a 1430 by 1440 by 1460. So 417, 1430. by 1440 by 1460, 111 calls. So basically what that trade would look like would be, if I take the trade, it looks something like this. You have price at 1379. If price goes down and I collect, let's say $500 on the trade, or what was that? What was that trade if I took it? Collect it, yeah, $4.10. So it's $400 of credit. What that looks like is I keep the $400 of credit. If we get to 1430, we start to go up. We get to 1440, we have a profit trap. We get to 1460, then we start to get a little bit more risk. But I have a $10 profit trap in here in addition to my 410 credit. So my max profit in this trade could be $1,400 or it'd be like 1410. Now the risk is going to look like that because it's undefined. So if somehow this stock just goes gangbusters, like, I'm in some trouble. But what's nuts is I took this on an option position and it's requiring full buying power for the trade. I don't know why. But anyway, I'll label it here. If it was a normal portfolio margin buying power like $2,000 to $3,000, I'd take the trade. But when it's $11,000 or $12,000, I'm not going to take that trade. So anyway, whatever. It's low. It's hypothetical. Hypothetical because buy power is awful. Meaning the requirement to take this trade is, I'll put buy power requirement is awful. But pretty sure by 417 we shouldn't get above 1460. So that could be a $400 trade that'd be nice to have, but not going to take it. All right, euro dollar, gold. I mean, we did all this stuff. Euro dollar is looking at the DXY upside down, right? So if dollar index goes higher, then look for a pullback and sell a euro dollar. Same thing. It's the inverse. So euro dollar, if we go 4 hours, look to see if this 200 moving average on the 4-hour chart pulls back. If we have a trend line break, euro dollar sells into this area, look for a break. I wouldn't mind getting trade 1. If it pulls back again, trade 2. Look to see if we have a trend resumption. I like the 111 to 112 profit target. That's just dollar index has to cooperate. If dollar index is going to pull back and then go lower for fresh lows, euro dollar is probably going to be the best beneficiary of that because it is the biggest correlation to the DXY. Okay, and then gold, I spent a lot of time on gold. I'm just looking for a pullback. I think we'll get one. We got a lot of bar counts on the daily time frame plus overbought conditions. I already have a gold futures trade that's in profit. So this one is, and did it close out? It did close out. Nice. So gold closed out. So that one closed out at a 5-cent credit, I believe. Let me double check my history here. So closed out for $105. Okay, go to this account, GC. Traded for a little bit of a profit trap. That's a good thing. I should be able to grab a credit out of this one. So I pulled in $1.20. It's trading now for $1.50 or so. Sweet. I'll take see if I get like 20 to 30 cents credit out of this. 30 cents credit, 20 cents credit. Cool. So that was $1.40 for that trade. Any GC here, GC here. I think it's just in this other PM account. There it is. 1, 2, 3, 4. Close it out for a 20-cent credit. Perfect. So $1.40 on gold. That trade, I'm going to close this one out. This is entry $1.20 credit, closed for 20 cents credit. Bonus profit, so net $1.40 per contract. Okay, closing out in Pulver Pulver alerts. All right. Any final requests? I'm going to wrap up here in just a minute. This trade is in the futures section. So that is an update here. Trade management update. GC entry $1.20 credit. Closed 20 cents credit for a bonus. Profit $1.40 net profit per contract. Cool. All right, well, chart alarms here don't really matter because I got the trade that I wanted. Now I'm just waiting for dips and pullbacks to buy some more. So this was initially the trade that I'd set up. I don't remember what workspace I had it on, but I had a profit trap between 30.90 and 32.50, but now it doesn't apply because I just took the trade off. So I will free up my alerts and see what happens to gold. Okay, we're good on dollar index. We're good on gold. Looked at euro dollar. Somebody's asking, why is US 30 so choppy today? I mean, price is just chill. It's fine. What do you want? You know, I mean, honestly, I mean, if everyone's like, I want more direction, well, then that's probably the direction you're going to get. So if you're not prepared for that, you're not going to have any fun. I'm totally fine with this. This little downturn here, I had a nice little stretch of day trades that were, I'm 34 for 35 right now on some of these day trades. So I don't mind just trading the market as is and not really having to deal with, that's no fun. I mean, I don't care. This to me is a trader's market. I'm selling premium when the opportunity is there. I've taken a lot of profit over the last couple of weeks, and that's a good thing. And I obviously want to be continuing to position for what is the best trade for 2025, but I don't know what that is. You know, I don't know if this market is capable of doing significant damage to these lows or if we're going to be in this chop fest for the next several months. Like maybe this market can just grind through a summer seasonality where it's a little bit higher, but it struggles to get all the highs, taken out. And then we come into, April, August, September, and the market falls again. Like this market might have put in like a high and low for the year, and somehow it's just going to somewhat be break even or positive. Nobody knows. But the bear side was a little bit overshot. We'd have to have like a real risk to go lower. Like we'd have to have, Doge has to come out more with chainsaws. Trump's tariffs gonna have to get worse. The Fed's gonna have to do something silly. The market's gonna have to break in some capacity. I don't know. But it was scary sentiment, but we didn't get the follow through. Okay. Hey, does somebody want to see GameStop? GameStop is announcing that they want to put Bitcoin on the balance sheet. So their stock is up. I took a trade on GameStop with earnings, and that was their big reveal. So I've got a trade on GameStop, which right now is up some profit. GameStop. So 270, I can max out here for about 230 bucks. So on the call side, I've got $5.50, which would be kind of nice. That would give me 550 of max minus 270. So I make 550 minus 270. So I make 280 bucks on the trade if it goes well. We're already, let me see if $31 is achievable by April. Right now, yeah. I mean, so now my $30 to $31 strikes could be, trading at the money. That's kind of a good sign. So if there's more encouragement, I could just take the profit now, but there's more encouragement. Like, let's get a surge here. Let's see if we can cross 30, 31, get through the expected move. Let's have a big mover. From the earnings print to current, opened up around 7% higher. Average move is around 17%, and it did hit. So based on what I expected for earnings, we did hit that expected move. So probably the safest thing would be just to take the profit and not worry about it. If I want to get greedy, I want to see if this goes higher and really starts to run. So I think to be on the safe side, I'm just going to take the profit. If I take 50 bucks, that's a tiny little win. I'm going to see if it'll push a little bit more. Okay, anyway, it's up. That's good. So earnings, you just can't make any money, can you, GameStop? I mean, I bought my PlayStation 5 from you. 14% pre-market after the company revealed plans to invest in Bitcoin and reported higher fourth quarter earnings. Well, that's great. What happens if Bitcoin goes down? It's a worthless plan if Bitcoin goes down. So we'll see. If there's any more momentum here, or we finish out the quarter strong, I don't know. Let me see what this is trading for again. I hate just to take the profit, but it might be worth it. Let me see if I get 320. Maybe I could sneak in a little bit more on the mid price. 325 not filling. 320 not filling. All right, I'll cancel it. I'll keep an eye on that one. But I do have a trade run on a GameStop. I'm going to see if we can get to. Let me see if we get above $30. All right, I'll keep an eye on that. All right, I'm going to let you go for today. See you tomorrow. Thanks, bye.
Thanks for watching today's A1 Trading Show. Be sure to subscribe and to turn on notifications so you don't miss the next one. Want more from A1 Trading? Check out the links in the description below, or our website a1trading.com. We have lots of free trading tools and channels available for you. We hope you have a great rest of your day, and we'll see you tomorrow.